Welcome back to another edition of the Vulcan Report with yours truly, Dex the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com. This is our end of day report that used to be called the Vulcan Report, and from time to time I still forget that and say Vulcan Report. But here we are. Hope everyone had a wonderful, wonderful weekend, and I know I did. So now it's time to get back down to business, and we need to look at these charts. A lot of interesting things have taken place since Friday, and we need to take a look at it. So Monday was a holiday here in the United States. The futures did trade until like noonish, and then here we are live again today. So let's take a look at what's been going on in these markets. Not going to spend a whole lot of time on this today. We're going to look at a couple of charts, and then we're going to keep it popping and pushing. First and foremost, we got a equity in front of us. It's the ticker EQX, and this one came directly from the trading room. As you can see here, we had our crash alert right here, and we've been getting a lot of downside production since then. And it looks like there is more to come, especially with a bearish weekly trend momentum reading, and of course, a drop in momentum. Momentum is dropping. Not a good thing. It's not what you want to see, especially if you have a bullish outlook. You've gone below trend line support, and you've made your way now inside of the Kumo cloud. All right, so we'll see how deep the correction goes. Will the correction turn into a straight up bear market, or are we just going to get a substantial pullback correction? Hard to say, right? So you got to trade what the market gives you. And right now it's giving you this in spades. So you got to go with it. Got to go with it. All right. Next we got is Sony. Sony, PlayStation, and a whole bunch of other things. All right, so this one here, we got this crash alert from a few days ago, and we've been getting downside production on it, as well as prices are coming through, crashing through the trend line support and getting their way inside of the Kumo cloud as well. We're under a correction, and we got a bearish weekly trend momentum reading. And as far as momentum is concerned, yeah, it's pointing down. So I think more downside production is coming from said crash alerts. All right, moving right along, we got the VXX ETF. All right, so we had a crash alert coming into today's trading, and we got very minimal downside production thus far. The bullish weekly trend momentum reading could be making the downside muted, but that's not necessarily always the case. So I'm going to still ride with the alert until we get another signal or what have you. You can see here from the rally alert, we had that nice upside production, and now here we are again. So I think right now the market is looking like it wants to correct here. We'll see. We will wait and see. It's looking like it wants to definitely do that. Now, I know the last crash alert we got was also very productive. It was very productive. And now I think we're going to see more of that on this one here. The last one before that was also productive. So was this one. All right. So I think more downsides coming in the VXX as well. Now, looking at bonds, ticker is TLT. This is a request coming from the trading room as well. Right now, I can see why this may look a little confusing. So first of all, we're in a bull market. The bond market is in a bull market. All right, this is all the Fed. The Fed has been propping up the bond market for over a decade. Really more like going on 2 decades, okay? They started this program of bond backing after 9/11. So this is this right here, all Fed, okay? We've had very few corrections. We're in a correction now. We had one back here prior, and then we had another one back here prior. All right, so right now, where are we in this particular cycle? Is it an up or down cycle? Right now, it's in an up cycle, okay? The momentum is trying to get more bullish. even though it's sketchy up in here, your rally alert here and your secondary rally alert here did net you upside potential. Therefore, I have to ride with the indicator until the market decides it wants to do something else. But for right now, the trade is now to the upside until further notice. So that's how that's going. All right, so the trade is to the bull side of the market and not the bear side of the market any longer. All right, so we're riding with that until the market does something else. All right, so that's where we are right now. We're looking for the market to possibly, rally from any kind of dip. All right, I think the market's going to try to still be supported, even though it dropped below the trend line here for temporarily. I think we may get another run at it, as it looks like we're coming out of a corrective state. All right, so that's kind of the way that I am seeing it as of right now. This is what I'm seeing. All right, so we're gonna go with that. I think all the pullbacks will be bought. That's number one. So I think every pullback in this situation will be a buying opportunity, even though you may get a further dip. Like back here when we had these gaps, the market pulled back to try to fill the gaps. So I think that's pretty much what you're playing right now. If I come up here and I pull up this perspective back here, okay, so this gap here that we're looking at, all right, technically was not filled. This gap here was never filled. It has not been filled. Therefore, I think on the TLT, at some point, we need to get down and drop below the 160 level in order to fill this gap back here, because this gap back here was not filled. It was not filled. Okay. So I think this for right now, the market's going to try to move up. We got overhead resistance going on. It may get one more uptick back into the Kumo cloud. And then I think we roll from there. We got the bullish weekly trend momentum reading that's helping to support the market at this time. So with that being said, I think that we're going to have to wait and see how long it stays up, because at some point, I think we're going to break back down and fill this gap. So for right now, we trade, we're buying pullbacks, all right? But afterwards, once the momentum reverses, then we have to ride with whatever side of the market that appears on. But for right now, that's where we are. All right. So when you see things like that, you have no choice but to go ahead and trade what you see. You know, there comes a time when sometimes these trends, when we know we're trading a market that is backed and defended by the Fed at all costs, well, then you have to ride with that. There's no choice but to ride with the Fed, because the Fed is backstopping the bond market. They're not going to let the bond market fail under no circumstances. It's just not going to happen. They're not going to allow it. So when you know that that's what the game is, you know that they're not going to allow certain things to take place, then you don't really have a choice but to keep buying the market. And you have to keep doing it until the trend changes. Once the trend changes, then you change with it. But for right now, that's all it is. You're buying the trend. Even if it's a short-term trend and the market doesn't, trend for long, you still don't have a choice. You have to buy the trend. If the trend is up, then you have to buy it. If the trend is down, then you have to look for rallies to short it. And that's pretty much what it is. At the end of the day, that's pretty much what you're doing. You're waiting for the market to give you, those keys, and you look for things like that. And then once that is no longer the case, then you say, okay, fine, I'm going to wait and sideline myself until I get another signal. So sometimes, trends can last so long that people forget what side of the market they're supposed to be on. But then it starts looking like, well, I think it's going to pull back, or I'm getting scared buying up here. But not really realizing that you don't know when a top is coming. You don't know where the market's going to top out at. You're just trading. You're just, going along with the order flow, trading with the order flow. That's all you can do is trade along with the order flow. And then once that order flow ceases, that's when you come in and say, okay, well, now that the order flow has ceased, now this is my turn to come in now and, and trade along with that. And that's what the PulseWaves do. We alert you when there is an algo shift underway from an intraday standpoint, and then we get involved during that process. So that's pretty much what we're doing. We're just going until that process changes, and then when that process changes, we get along with it. We move with it. We do what the market is doing at that point in time. And so sometimes patience comes into play as well. You have to be patient and wait for the markets to do certain things, and that's okay. That's okay. We don't mind that. You know what I mean? We don't mind doing that. We don't mind being patient and waiting for the market to do what it needs to do. Because sometimes it is just a little wait. Just got to be a little patient. Then the market comes in and it rewards you. And when that happens, you're like, okay, I'm glad I was patient. I'm glad I waited. Here I am being rewarded. So that's pretty much all it is at the end of the day. All right. This is another request we got here. This ticker is UGAZF. So this is the 3x long nat gas. All right, ETN. And we got a crash alert for tomorrow's trading on this one. So our initial crash alert happened back here. We continued to get downside production, right? We got a temporary rally alert here. We only got limited upside production, and then the market proceeded to drop again. Now we got a crash alert for tomorrow. What this one's looking like, it wants to drop below the Kumo cloud at this point. Remember, these 3x ETFs are not really designed to hold overnight because of the volatility. They try to mimic the futures, but because it's a 3x ETF, these are prone to overshoot targets a lot. And they seem to undergo price destruction during prolonged trends in the market. So because this is a 3x long ETF and not an inverse ETF, if nat gas goes parabolic to the downside, then this thing is just going to absolutely fall apart. All right. And that's not what you want to see. So with this one here, because you're consolidating up here and you are correcting from the bear market rally, remember, this is still in a bear market. All right. Which is weird. How can a 3x nat gas ETF be in a bear market when nat gas is in a bull market? You know what I'm saying? It's like, it doesn't make any sense. Does everyone, track with me here? All right. So this is what it is, man. This is what it is. All right. So moving right along. All right, here's another request. This is the TVIX, the TVIXF. All right, this one came into today with a crash alert. Got a little smidgen of downside productivity, and I think we'll get more downside production tomorrow on this. This is a 2x ETF. Okay, this is the Volatility ETF, short fund ETF. All right, so me personally, I gave up on trading the VIX a while back when the XIV blew up. Remember that ticker, XIV? So I said, forget it. Yeah, the XIV was supposed to go up when the market went up, and then the TVIX would go down when the market was going down. So I don't trust these anymore. And this is in a bear market as well. So very weirdness, a lot of weirdness going up. So you had this nice little run up, had the rally alert. Now the market saying, okay, I'm done. I want to correct now. And it is getting lofty up here at the bottom of the Kumo cloud, which is a major resistance zone for that. All right, another request we got was JNUG. All right, so again, keep in mind that JNUG is going to do whatever the GDXJ is doing. So we have a crash alert here, and the market has been going down, 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 giving us more and more downside production, dropping below the trend line support and correcting further with a bearish weekly trend momentum reading. Not looking so good here for bulls. All right, the SQQQ, which is the inverse ETF for the NASDAQ 100 QQQ, had a rally alert, and we've been getting upside production from that. The trend line is the initial target for this. I do not know if this is going to go bullish because for so long the market has remained resilient, and I don't see this being a trend change or anything like that. It's just too much overhead resistance. And when I say too much, I mean too much. This thing is locked in. This is a mature, long-lasting bear market, and it's going to take a lot to turn this tide. But for right now, you're on the long side of the trade, which is the right side of the trade, because the market is correcting off of the bear market lows. So if you're long the SQQQ, that's good, but you got to protect your profit. So you may want to start popping your way through it and keep in mind these leveraged ETFs can really get a little beside themselves. So just be careful. All right, here's another request. This is ticker DRV, and this is the daily MSCI real estate 3X bear. All right, so it's an inverse ETF moving 3 times that at the real estate market. Keep in mind, it's probably tracking more so with the IYR, which is the long retail ETF. And you can see here, this thing has been in a long-term bear market on the daily chart. Again, it's going to take a lot to turn this. So you came in this week with a rally alert, and you're getting that upside production, but getting up here near the initial target, the trend line resistance, and it's getting lofty up here. Don't know how much more you get, but you do have a bullish weekly trend momentum reading. If you can get another bullish day out of this tomorrow, chances are you may be able to get inside of the Kumo cloud here. All right. Moving right along, we got the Bitcoin Futures Composite Index. All right. So as you can see, you had this gap back here that needed to be dealt with. Remember, I explained that to you several videos ago. Well, the question is, have we fulfilled that? Have we filled the gap? Close, but no cigar. You have not filled the gap. You have not filled it. It looks like you have, but you haven't. All right, let's break it down. So let's see, right here you got 99.25. Right here you got 99.05, and then right here you got 98.90. So let's see. All right, I take that back. I don't know why it shows different than when you put, because here we got 99.25 as the low. Then this one says 99.05 is the low. So this did take out, okay, and then this one here says 98.90. Hold on. You know what? Technically speaking, you did. I guess they're so close, it's hard to see here on the chart. But no, technically you did. Technically on this bar right here, this bar should have technically sealed the deal. Doesn't mean you can't correct deeper into the gap, but technically, if you want to be technical, yes, the gap has been filled on today's bar. So I take that back. All right, so you've now closed and filled the gap. Like I always say, pointers and gaps must be respected at all times, and eventually they will be. Eventually, they will be. Back here, I'm sure a lot of people doubted me when I said, okay, you got a pointer here and you got a rally alert. All right, pointer. And then the market went down and then proceeded to continue to go down. I was like, no, it's not happening, Dex. You're wrong. You don't know what you're talking about. You don't know what you're talking about. Look, we're getting lower. This thing's about to drop like a rock. Oh, my goodness. And then what happened? What happened? Boom. The pointer gets respected. And the rest is history. So pointers, like gaps, must be respected. So where do we go from here? Well, that's a good question. That's a really good question. I think we're going to start to base out around these levels between the 10,000 and 10,500, like I told you. If this is a real gangster bull market, then it will be able to sustain this, to handle this, and this will be a key support. And the base should take us into maybe October. All right. The longer the base stretches, the more powerful it tends to be. So it depends, but we should go between an oscillation of 10,000, 10,500. Like I said back when we were up in here. And then this will give us the energy we need to get to 15,000. All right. So once this base is built, we get back to 15 to 20,000, and this base is what will be the base that takes out the highs. All right, the all-time highs. This base right here is a key important base between 10,000 and 10,005. If it holds, then this bull market is real. And then we start moving like the NASDAQ from here, from 10,005. All right, you start looking like that NASDAQ chart I showed you when you go from from this almost flat to a 90-degree angle. When you get that 90-degree angle, your market is bugging. And that's what we're going to get. We're going to go from that 45 to 90-degree angle. When the market gets like that, it is in a parabolic state. Parabolic for the Bitcoin, though, will be around 50,000, to be honest with you. Once the Bitcoin reaches 50,000, it enters into the parabolic stage, the first parabolic stage. The secondary parabolic stage is at 75,000. The third parabolic stage is at 100,000. And then 100 plus is when you start getting to your Sigma 4, Sigma 5, and Sigma 6 bands of volatility. And those are super rare, but if Bitcoin hits those, you would be the most ignorant person on the face of the earth not to take profit if Bitcoin hits a 6 Sigma band and we're at 100,000 plus per coin. I would sell everything and take profit, because the snapback would take you from 100 plus all the way back down to 30,000. 30,000 will be the new support after you go 100,000 plus. So on the massive pullback, bubble popping will take you back down to 30, not 20. You'll go back to 30. Technically speaking, you should never see 20 again. Once you hit 100 plus thousand, you never hit 20 again. You'll go to 30. All right, because then it'll start working on what is called the algo crude oil projective. The algo crude oil projective, what it normally does before they got in and started making it a political football, is you would have oil go to $100 a barrel, and on pullbacks you would go to 40. You would never drop below 40, because 40 is the old resistance that has come support. 40 was the milestone back during the first Gulf War. So that's why you didn't see crude oil drop below 40 for a long time after it hit that $100, because it went to that plus 6 Sigma. So you correct back to your old historic highs as your new support lows. I hope you guys are getting this. You probably want to save this recording and watch this video again later on, because I'm explaining to you now the longer term outlook for Bitcoin. All right, now I gave you the projection for if the 10,000 to 10,005 support elongates and holds. Now here's the scenario if it does not. The scenario for if it does not means that Bitcoin would be in jeopardy of falling below 1,500. Then it switches to more of a gold to silver algorithmic perspective. Gold and silver's parabolic algorithmic perspective tends to be a lot more bearish than the crude oil perspective. Crude oil only went negative because of the political ramifications of what the left are trying to do to get Trump out of office. If this was not an election year, crude oil would have never went negative. Remember, crude oil is the litmus test for conspiracy within government. Let me explain. Back in 2008, when they wanted you to vote Democratic, they used crude oil again and ran it up to $150 a barrel, saying, look how much you're suffering under the Republican government. You want a Democrat in there. What did everybody do? They got the Republicans up out of there and installed a Democratic president. Soon as it was a shoo-in that Barack Obama was going to win, they allowed crude oil to fall back down to its correct price. This time they're doing the opposite. Instead of letting crude oil go back up to $150 a barrel, they made it go negative. Now, your Republican president does not get all the shine for that. They didn't just do it to hurt Trump. No, that was sending another message. They were using it as a political football, not just to take out, the Republican president, but also to send a message overseas that the U.S. was still in charge of the world oil trade and trade market, and that this is what will happen to you if you guys decide that you were going to gang up on the U.S. and no longer trade oil in dollars. So that they were sending a message, all right, overseas when they took oil negative. So in this perspective, with the Bitcoin Futures Composite Index, it will go the way of the gold and silver political machine. Gold and silver political machine is when you can't allow gold and silver to prosper or get too big before you attack with your algorithms to come and short the market. The reason why the government has always been effective at keeping their boot on the neck of gold and silver markets is because historically they have always been what is called thinly traded. So it doesn't take a lot to move gold or silver markets. That is not the purpose of this video. I would be talking to you for hours if I was to explain in years past how they did that and all the different times where they did that. I am not the only person who documented those shenanigans when they happened. Like the one day when they dropped silver $5 after the close. All right, just ridiculous things like that. So, yeah, the Bitcoin Futures Composite Index could go that way because, see, it's easier to manipulate the futures because, technically speaking, it's thinly traded as well. It's not well suited for larger markets like historically your crude oil is a pretty big market and you're not supposed to be able to push that around so easy, but because we're in a different type of environment now where political people in power can do whatever they want with the markets, they can just push a button and it happens. But traditionally your bond market, your bond futures, oil futures are usually enormous markets that you just can't push around. But now that we live in a new environment, they can do anything they want. So the perspective for the Bitcoin, depending on what happens at this support zone, will also tell us more about the election long before it takes place. If the supports don't hold and they take the Bitcoin down, it will drop below that $1,500 threshold. All right. That will be that's a different agenda. And we'll have to do another video on what happens when and if that happens and why that will happen. But that's because they're putting the Bitcoin on the same time schedule as they do with the precious metals markets. It's all in the algorithms. I know it's complicated and hard to understand, but just understand that those are the two trajectories that we're on. We're at a crossroads now with this Bitcoin. It means something depending on what avenue Bitcoin goes. If we go south, that means one thing. But if we do the 15,000 after the support and then the 25, 30, and up to 100 plus, that also means something else is happening as well. We'll get into more of that down the line. We'll cross that bridge when we get there. I don't want to give too much because that's not the purpose of the video, but suffice it to say, yes, the gap has been filled for now. And technically speaking, the market can get up and rally from here. We do have a bearish weekly trend momentum reading, and the trade is still on the short side of the market. However, the crash alert is paying dividends in spades right now. So that is my long-term, short-term, and intermediate-term analysis on the Bitcoin Futures Composite Index. All right. This will definitely be a video you're going to want to reference later on. All right, SVL, this is on the AX exchange, which is your Australian exchange. This stock is called Silver Mines. All right, so this one has a bearish weekly trend momentum reading. The crash alert back here has been paying downside dividends. As you can see, we've been getting that downside production. Trend line support, though, is the initial target for this at this time. So this one, the trade is definitely on the sell side of the market. All right, let's see here. We got another one. This is AQB. All right, so let's take a look at AQB. All right, so this is Aqua Bounty Technologies. I don't think I've heard of this one before. All right, so this one, oh my goodness, good grief. Okay, so we had a rally alert here, and we've been getting massive upside production on the rally alert today with a green. We have a bullish weekly trend momentum reading. So this is looking like it wants to go some more. Just keep in mind you are in a resistance zone. You've already taken out the first target, and you've taken out the secondary target. Now you're headed up for the tertiary target right here, the top of the trend line resistance with a bullish weekly trend momentum reading. So this one's looking like it wants to come back up and test the old highs. But it may peter out around the $4 mark. So keep that in the back of your mind. You may only be able to get about $4 out of this, meaning in total, that it will stop around the $4 mark. That's what I'm saying. That's what it's looking like on the initial thrust. We probably got one more bar, big bar like this coming up to get you in the 4-ish territory before you start hitting some type of resistance and see some type of a pullback. So according to this, we should move to about 410, 420 before hitting resistance and pulling back possibly toward 360. And then the market will move sideways, decide which way it wants to go from there. All right, so this is where you are right now. So it's looking great. It's looking good. See if you can lock in some profit if you are long this particular market. All right, let's see what else we got. All right, Facebook. Let's pull that up. All right, let's see here. Facebook. All right, so as you can see, Facebook is finally having its correction. So we had our initial crash alert back in here. Market moved a little bit sideways, didn't do much. Even thought we were going to have maybe a reversal. Had a rally alert here, got just a little bit of a smidgen of upside production before the market turned bearish again. Came into this week with the crash alert, got that initial downward thrust production, got more downside production today. Trendline support is the initial target on this pullback here on Bitcoin. I say Bitcoin. I got Bitcoin on the brain. Facebook. We're talking about Facebook. All right. We also have a bearish weekly trend momentum reading for Facebook. So the initial target is the trend line support. Secondary target puts you down into the 230s. Momentum is falling right now. All right. So I think that you are definitely nearing a situation where this could be a longer, protracted correction. All right. So if you are short the Facebook, you're going to want to keep your eyes on it. See if there's a way to lock in any kind of profit, especially if we get another downward thrust tomorrow, which it is looking like we should probably be getting. All right, let's see what else we got here. Tesla. All right, let's pull up the Tesla. All right, Tesla. All right, so wow, Tesla. All right, so here's the crash alert back here on Tesla. And look at all the downside production we have gotten on that crash alert. And you hit the trend line support today, which was the initial target. Let's have a round of applause for the PulseWaves. Go PulseWaves. Go, 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 go. I tell you, man, that's what I'm talking about. That's what I'm talking about. PulseWaves, man. It is what it is. You can't deny the power of the pulse. So the PulseWaves doing their thing right now, man. Doing their thing. Wow. All I can say is, wow. Will we go to secondary target down here, the trend line? I'm sorry, at the top of the Kumo cloud. That will put us around the 260, 270-ish mark. That's quite a drop down. Not out of the question though. All right. So if you were a subscriber and you've been shorting this thing, you've been getting all this downside production, you're going to want to go in and start protecting profits, lock something in, do something. Do not turn this wonderful short trade into a loser. All right. Don't do it. Don't do it. Do not do it. All right. We got a short week in the market, so not expecting, a whole lot to happen. We could get a technical bounce tomorrow. It is possible, but probably not probable. But yeah, anything can happen, man. Anything can happen. Anything can happen. The best thing that you can do is to be on point. Here's their Litecoin too, by the way. Look at your Litecoin. We had this crash alert right here. Look at all this downside production we're getting in Litecoin. Crash alert, downside production. Crash alert, downside production. You cannot make this up. All right, so this is where we are. All right, so I'm expecting a lot more downside after the gap. You got to back and fill this gap at some point. Besides that, I think this has room to fall more. I did warn that I figured that this was going to be the case with the Litecoin. It just, the markets are predictable. They tell you what they're going to do. We don't always like what they're telling us that they're going to do, but we still have to listen. All right, we don't get to just ignore it because ignoring it costs money. All right, so here's the crash alert back here on the Ethereum. Nice downside production. Now we're just moving sideways. Market's trying to decide what it wants to do next, if anything. But it did meet the trend line support. We got there. We made the initial target. See what I'm saying? The market's moving predictable patterns. Again, we ignore the rally and crash alerts at our own peril. It just is what it is. Take a look at the NASDAQ futures. So we had this crash alert back here from last week, and we've been getting downside production ever since. We hit trend line support today, so I don't know if they're going to get any more downside on this because the initial target has been met. If the support's going to hold, this is usually when you're going to bounce. But if it doesn't, then the trim top of the Kumo Cloud around the 10,005 level is in play, which means you got about another 500 points on the table to the downside. Weird, isn't it? I know. It's some weird stuff, man. It is some weird stuff. I know. But like I say, what you gonna do about it? It's not a whole lot you can do sometimes. You know, you have to trade what you see. There's nothing else you can do. Not a thing you can do. You can only trade what you see. And right now what we're seeing is that the market is still to the downside. All right. So with that being said, I think that's all we got, man. That's all I got for you today. I'm tired. It's been a long day. I appreciate you guys coming. Like I showed you on that Tesla chart, man, as far as gappage, no. I mean, it's not about gappage anymore now with Tesla. It's not about gappage. Not at all. It's about something else. Now it's about fundamentals. Tesla, they've been talking about the whole truth about Tesla. And what does that really mean? You know, they're looking at the company now. So it's being shorted, not just from a technical level anymore. They're starting to add fundamentals to it. And once you start adding fundamentals to it, that kind of changes the overall perspective. It changes it in a big way. You know what I'm saying? In ways that we can't even begin to fathom. So they're saying that right now, there's really no reason for Tesla basically to be bullish or to be in a buying situation. I mean, they're actually saying that. They're saying that basically Tesla is whack. They're saying it's whack. What do you do with something that's whack? You know what I'm saying? There's not a whole lot to say and talk about when you're dealing with that. So if they're calling it whack and saying there's no reason for it to be moving up, you got to start listening to what the people are saying if you're a longer term, guy or gal in that market. All right, so with that being said, folks, that's all I got, man. That's all I got for you. All right, so remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And with that said, I am out. Peace.